Hi there. Imagine a world where your crypto trades happen in the blink of an eye, faster than a New York Stock Exchange bell, with fees so low they barely register. That's SEI, the Layer 1 blockchain built for high-speed trading and DeFi magic. Welcome to this deep dive, where we're stripping away the jargon to reveal what makes SEI tick. Today, we'll explore the bull case. Explosive growth as institutional money floods in, pushing prices toward 65 cents. And the bear case, a slip below key supports, could drag it to cycle lows around 18 cents. Stick around. By the end, you'll have a simple framework to analyze any crypto like a pro. Let's accelerate. No cryptocurrency floats in a bubble. It's all connected to the wild ride of the global economy. Think of macro factors as the weather system steering your ship. Let's break it down simply. First, monetary policy. This is like the central bank's remote control for money flow. The Federal Reserve, for instance, tweaks interest rates to cool or heat the economy. Right now, as of mid-September 2025, the Fed's key rate sits at 4% to 4.5%, a slight cut from earlier highs, signaling they're easing up to boost growth without sparking runaway inflation. Lower rates act like lighter gravity. They make riskier assets like crypto more attractive, as investors chase higher returns instead of parking cash in safe bonds. But if rates stay sticky, that gravity pulls prices down. Next, economic indicators. These are the economy's vital signs. Take inflation, measured by the Consumer Price Index, or CPI. In August 2025, U.S. CPI clocked in at 1.9% year over year, cooling toward the Fed's 2% target, which is good news. When inflation creeps up, it erodes your savings, so smart money flows to scarce assets like Bitcoin and alts like SEI that promise growth. High inflation? It's rocket fuel for crypto. Low and stable? Steady sailing, but watch for surprises like supply chain hiccups that could reignite it. In short, with rates easing and inflation tamed, the macro winds are tailwinds for SEI, but a sudden storm could flip the script. All right, we've set the stage. Now let's zoom in on SEI itself. No more big picture talk. This is where we ask, is this coin actually delivering value? SEI is a Layer 1 blockchain optimized for trading and DeFi, blending Ethereum's security with Solana-like speed. It's the fastest EVM-compatible chain out there, clocking 400 millisecond finality and over 200,000 transactions per second at ultra-low fees. Born from Cosmos Tech, it's laser-focused on high-frequency apps like decentralized exchanges. Think Robinhood meets blockchain. Let's start with on-chain metrics. These are the heartbeat of the network, recorded forever on its public ledger. On-chain just means real activity you can verify, like checking a car's odometer. Active addresses, the number of unique wallets buzzing with action, have surged 500% recently, hitting about 4.13 million. Transaction volume? Up 5% to 13.72 million in the latest week, with spot trading volumes exploding to $2.23 billion in the first half of 2025 alone. Translation: people aren't just holding SEI, they're using it for real trades and DeFi plays. Healthy pulse? Check. Now tokenomics, the economic engine under the hood. SEI's total supply is capped at around 10 billion tokens, with about 1.3 billion more minted gradually as inflationary rewards to validators over the next decade, up to 15% of supply total. This keeps the network secure by incentivizing stakers, but it's not hyperinflationary like some coins. What's SEI for? Utility drives demand. It's the gas for transactions, staking rewards, governance votes, and powering DeFi apps. No fluff, just fuel for fast trades. Smart design? Absolutely. Finally, development activity. A project's code is its DNA. Head to GitHub for SEI protocol, and you'll see consistent commits from a dedicated team. Recent repos like Sane show ongoing upgrades for EVM parallelism and Cosmos integration. Over 500 builders joined their AI Accelathon, launching 186 projects with 200K plus in prizes. Roadmap on track, with ecosystem TVL topping $200 million. This isn't vaporware. It's a team shipping code that scales. Fundamentals are the roots, but markets are driven by human psychology and data flows. Let's read the tea leaves without the crystal ball. Technical analysis, or TA, is like charting a map for price moves. Keep it beginner-friendly. Support is a floor where buyers pile in to stop drops. SEI's sitting pretty at 27 to 28 right now, defended multiple times. Resistance? That's the ceiling seller's cap at around 30. Break above and momentum builds. Below support, and it tests lower. One easy indicator, the Relative Strength Index, or RSI, measures if something's overbought, too hot, sell-off likely, or oversold, bargain time. SEI's RSI is neutral at 49.57 on daily charts. Balanced, not screaming buy or sell, but watch for a dip below 30 for oversold bounces. Volume and correlation add context. Price jumps on thin volume? It's fake news. SEI seeing solid action with 24-hour volumes around $268 million. Significant moves need that backup. Correlation-wise, SEI dances close to Bitcoin's tune, with relative BTC volume at 0.46%. When BTC rallies, as it's hinting now, SEI often amplifies it. But if BTC stumbles, expect SEI to feel the ripple. Does it follow the leader or forge its path? Mostly follower, but its trading focus gives it unique flair during DeFi booms. Now the magic, pulling it all together into a thesis. Sentiment analysis gauges the crowd's mood. Think vibe check. The Crypto Fear and Greed Index is at 37, deep in fear territory amid volatility, suggesting oversold potential. On X, chatter's mixed. Bullish setups like symmetrical triangles point to breakouts, but bearish posts warn of pressure if supports crack. Synthesizing. Macro tailwinds from easing rates, strong on-chain growth, neutral TA, and fearful sentiment scream opportunity if execution holds. Bull case. Everything aligns. Fed cuts deepen, DeFi TVL surges past $300 with AI integrations, and SEI breaks 30 on volume. Price? 2x to 55.65 by year-end, fueled by institutional settlement layers. Bear case. Big risks loom. If inflation ticks up or BTC dumps, correlation drags SEI below 27. Hello, 18th lows and 30% wipeout. Weakening RSI and low volume could amplify a broader altcoin bleed. Base case, most likely. Steady consolidation at 28.30 with mild 20% upside to 35 cents as macro stabilizes. Growth continues, but no moonshot without a catalyst like major exchange listings. There you have it, the 4-step framework. Start with the big picture for macro gravity, deep dive the coin for real value, read the market for price signals, and synthesize for your prediction. Apply this to any crypto, and you'll trade smarter, not harder. If this breakdown lit a spark, hit subscribe for more deep dives into alts like SOL or INJ. Drop in the comments. Which crypto should I tackle next? Your voice shapes the show. And remember, this is not financial advice. This video is for educational purposes only. Always do your own research and consult a pro before investing. Crypto's thrilling, but it's not a casino.